guys, Jason Schnitzer here with Remax Tiffany, and what I've got for you today is how's the real estate market here in Southern California for week 29 of our 2022 real estate market. As always, I'd like to bring you the latest and the greatest what's happened in the last 7 days here in Southern California, specifically the Orange County area. That way you can be most caught up on what's going on in the here and the now, and I like to start out with statistics. So if you've been following along, or maybe you haven't, we are creeping up to that 4,000 houses for sale in Orange County, single family residence, condos, townhouses, everything. And the trend still is more new houses are coming on the market that are going off. And as always, why is that? You can look at this number down here, interest rates. Since 2021 has ticked over to 2022, we've gone from 3.25% to 5.5% rates. What that has done is affect our supply and demand, and really it's the demand side. So with higher interest rates, that drastically affects a buyer's payment and affordability and how much they can borrow versus how much a purchase price is. And that has naturally brought down that demand, which is, as we're seeing, has increased our supply. And this is what I've been talking about for the last year or so. We've been in a really affordability driven housing market. Now, the big thing that you guys need to be on the lookout for is next week, actually. July 28th, I believe that's Thursday, they're going to come out with the official GDP numbers for the second quarter of this year. If any of you have been paying attention, the first quarter of this year we had a negative GDP, gross domestic product number percentage, and if that comes out low or negative as well, we are technically in a recession. Now, depending on what news sources you listen to, you haven't or you have heard rumblings of a recession. The one factor that hasn't played into this yet is we still have really, really good unemployment numbers. But our administration, not to get political, but our administration has not yet acknowledged even the idea of a recession. So it'll be really interesting to see if we do have, and what appears to be, a negative GDP for the second quarter, and we're technically in a recession. If there is acknowledgement publicly, especially by our government, we might in fact see those unemployment numbers start going up, with the potential fears of what all recessions bring. Now, I don't say this to scare you, but I will say with every potential recession, there is economic opportunity, especially with regards to the housing market, just because of how stable it's been historically speaking. The biggest question that I'm getting now is, well, what does that mean? What does a recession mean? We could potentially see a housing market crash. You know, my crystal ball, of course, is still in the shop. But the thing about real estate and the difference between our market now versus 2008 is I read an interesting statistic. Comparatively, nowadays, 92% of people, compared to 2007, which was about 60 or 70% of people, have fixed interest rate loans and have equity in their house. So even if we saw an economic downturn, why the biggest difference between now and 2008 is with a fixed interest loan, that means your payment doesn't change. Whereas back in 2007, people had interest-only loans, 0% down financing, balloon payments due, adjustable mortgage rates. So what happened back then was we had a big economic pullback, and people just flat out couldn't afford their payment because a lot of those payments adjusted up, or you were paying interest only, or all of a sudden, almost in, I say overnight, but in about a 3 to 6 month span, their house went from having equity to then owing more on their house than what it was worth. I just don't see that happening in this real estate market, just because of those things that I just talked about with fixed mortgage rates, etc. All that being said, if we do see something like this happen, of course, the government's probably going to do as much as they can to suppress these interest rates. But it'll be interesting to see, because their only mechanism to stop what is now record inflation at that 9.1%, as I talked about on my video last week, is to raise interest rates. So be sure to stay tuned to my weekly market updates, because things are going to be constantly changing. I really think we're going to see a lot of change here in the next 6 months, the second 2 quarters of 2022 and into 2023. So as always, guys, thanks for watching. If you have any questions regarding your real estate portfolio or are planning to make a move, whether that be an up, down, out-of-state investment property, now is the best time to take advantage of our free marketing or free real estate consulting. Reach out to us via social media, give us a phone call, email, whatever modality is most comfortable for you. Because like I said, my crystal ball is still in the shop, but we work with buyers and sellers every single day in this ever-changing market. So what we want to do is give you the most up-to-date information possible so you can make the best educated decision on what is your most expensive asset, your real estate portfolio. So as always, thanks for watching. I'll catch you next week. Thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Yeah, what Jason and I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below and we'll get you those answers.